Hi, this is Barbara Longay here with Easy Peasy Crypto and Crypto Assets Made Simple. I've been talking to you for a while now about the whole phenomenon of Bitcoin and some of the investments that I personally have invested in. And today I'm going to dive deep into some of the origins of Bitcoin and why I think Bitcoin is a fundamental source of how money will be transacted and the new energy of money going forward in the future. So without any further ado, I'm going to show you my slides here because this is going to give you some good graphics to help understand what's going on. And this is an opportunity not just to understand what Bitcoin is, but it's an opportunity to turn this into an investment for yourself and as part of a business strategy on how you can increase your own income using these types of assets. So as a general disclaimer, we have to start with this. I'm not a financial advisor. I'm not giving any financial advice. I'm sharing with you some of the strategies that I personally use. So you need to do your own due diligence and double check your own sources of information on this. But in general, Bitcoin, understanding it, you need to understand how and when it was created. It was originally created, the first white paper came out in late October of 2008 as Lehman Brothers and the entire financial industry in the United States was in huge havoc. People were very concerned about the amount of greed that the big banks were showing and how they transacted business and how they did business. And Bitcoin, which was then first minted, the first one was made in 2009, but it was really due to this extreme pressure in how money was currently being used, and let's just admit it, abused in the financial markets. And when we look 10 years later, we still see a lot of companies and countries around the world that are bankrupt. Greece, Italy, Portugal, Cyprus, Belgium, France have a public debt of more than 100% of their GDP. You only need to look at the trillions of dollars in debt in the USA, and most major countries have linked their currency, and all of our money is linked to each country. Bitcoin changes all of that fundamentally, and it's really about looking at where are we today 10 years on with Bitcoin. You still have a lot of recessionary pressures that may be appearing. A lot of economists are saying it's just around the corner. We've seen unprecedented growth in the last 10 years, huge economic growth across so many countries, and yet we still have a natural cycle. Everything that must go up is now looks like it may be nearing a downturn in the near future. So are there signs of a global recession coming? Yes. Do we know when? No idea. So what is the crypto market? Okay, it's a $1 billion market, and the potential is absolutely enormous. What's been happening over the past decade, and particularly in the last 2 or 3 years, is the regulators have come into play and been enforcing a lot more rules that are common with other financial institutions, particularly in the United States. Bakkt, which is owned by the New York Stock Exchange, is now allowing hedge fund traders and large institutions to buy into Bitcoin. That's been huge. There have been a number of other huge regulatory issues behind the scenes, and you'll hear things we talk about like KYC, which is Know Your Customer. All kinds of other regulations behind the scenes are helping to stabilize and get rid of a lot of the crap and altcoins that were initiated. And there was a giant flow a few years ago, people just making up coins and making millions of dollars theoretically through thin air. And now the regulators are saying, listen, if you're going to be a financial product and it needs to be regulated like a financial product, we're still haven't finished all of that regulation. There still will be some changes going forward for sure on that, but knowing that this stability of the regulatory institutions is bringing some more stability into the pricing of Bitcoin in particular. And if you take a look at this as the average growth of Bitcoin back from July of July of 2017. We had the huge spike showing here in December of 2017, significant drop. And this year, Bitcoin has been the top performing asset globally. It's beat out stocks, bonds, pretty much any type of asset. And one of the driving forces in the marketplace today in terms of price of Bitcoin has been, number one, the stability of the regulations coming into play. And number two, in particular, we're looking at something that's called the halving or the halvening. I haven't seen any specific way that it's spelled. It's spelled both ways in the literature. And what it's saying is, written into the actual coding for how Bitcoin was created is a reduction in supply after so many blocks, so many of these coins were mined. And initially there were 50 Bitcoin mined every 10 minutes. Then it dropped down to 25 Bitcoin mined. In July of 2016, it dropped down to 12.5 Bitcoin mined. And we know for a fact that Bitcoin, again, it's part of the programming, Bitcoin will be dropped in half in terms of how many are being mined every 10 minutes, down to 6.25 Bitcoin coming in May of 2020. And how do we know the date? We know it because it's based on the math of how many have been created. So it is a mathematical calculation, and they'll have it probably down to the next minute, to the next hour, over the next few weeks. But you can see quite clearly from the chart, there have been a lot of peaks and drops over Bitcoin, and it's been declared near dead so many times. There's December of 2017, peaking at $17,000, and dropping down here. We're well below the traditional line, a statistical line of where Bitcoin would be evaluated. Where is it going? Nobody knows for sure, but we're talking about very specific supply and demand issues now, as clearly the large institutions have been able to take significant positions into Bitcoin. They've been buying in big. The average consumer has not yet taken a big position, and you might hear people telling you you're crazy. Talk about that you're looking at Bitcoin, but these are numbers that don't lie in terms of what happened after the last halving. So we'll be going into the third time that Bitcoin supply gets reduced in May of 2020. And this is statistically what happened after the last halving in July of 2016. So there was a ginormous increase in the value. For 2019, and as we head into 2020, Bitcoin was still the best performing asset over the past 10 years. It was by far the best performing asset in 2019. And we're looking at the next 12 to 24 months, significant potential opportunity as well. And this slide is showing what a hypothetical portfolio would have looked like if someone had invested in traditional stocks and bonds, assuming a global investment of 60% stocks, 40% bonds, and they had zero invested in Bitcoin. They would have had an annualized return of 5.7%. This particular scale was drawn by, this chart was done up by Grayscale, which is allowing institutional investors in the United States to take positions in a number of the cryptocurrencies. But the reason I like to show this is because it shows you how you can make a much more calm, evaluated choice of what percentage of your assets would you actually consider investing into Bitcoin. And if you had just 5% of your investable assets in Bitcoin over that 5-year, 6-year period, you would have nearly doubled your investment, annual investment of 5.7% to 10.6%. And that strategy is called asymmetric investing, where you're holding a classic investment of 90 to 95% in what you already understand and you're already invested in, and then you're adding in a higher risk portion of the 5 to 10% of those assets in something that is very risky. And there's no doubt that Bitcoin is still a very risky asset. And there is, of course, the possibility that you could lose everything. I don't think that's going to happen, and it hasn't happened over the prior 10 years. But this shows you what would happen if you were to take that risk and invest just 5% of your investable assets in something like this. So you would have gone from a 10.6% annual return down up from a 5.7% if you had invested in traditional stocks and bonds. And understanding, again, this was a really peak return period for the global exchanges over the past 6 years. So this is to help you understand what number is your risk assessment, where do you fit in terms of analyzing what risk you're comfortable with. So it shows that even putting up to 5% of your assets in, you could still make some significant investments in that increase in return on the Bitcoin. So looking overall at how to make building a passive income, it is always about getting regular small payments over time versus one large one-off payment. And the Lion's Wealth approach is diversification and individuality. And this is allowing you, they're creating a portfolio of various investments that you're using blockchain and Bitcoin to increase the yields and increase the privacy and increase the security of your earnings. It is also a business opportunity. So yes, if you'd like to earn additional income, there is a way for you to use this not just for your own passive income, but a way for you to earn income by helping to bring other, sharing this investment with other investors. The initial minimum investment is only $500 to get started, which is significantly lower than most other projects that are similar to this that I've seen around that are looking at 10, 20, 30, $50,000 or euros to get involved in to achieve the same types of returns that we're looking at. Part of what makes this Lion's Wealth attractive to me is that it is all transparent. You see exactly what your payout is. Every 2 weeks you get a payout, and it's been just amazing for me to see those returns every 2 weeks. You also have currently coming online will be a classic car coin, a gambling token for people who are interested in online gambling, which is a giant business potential in the future. And what I've invested in now and what is currently active is something called Project Masternodes. And understanding Masternodes is that you're investing in the hardware and software that runs and verifies the transactions for a lot of the altcoins. And in the same way that Visa and MasterCard are taking a hit, somebody's getting paid every time that you use your Visa or MasterCard, and it is the merchant who's paying those fees. In this case, there is a fee associated, even if it's a tiny fee for using these altcoins, there's still a verification process. So it's as if you were Visa or MasterCard and you were earning that hit on every transaction made around the planet as they verify these transactions that are occurring in these new cryptocurrencies. There is a lot more coming up with Lion's Wealth. They've got their own wallet now called Coinigram. They're coming up with their own debit wallet, and I'm sure we're going to see lots more fun things coming up from them. And let's see, here we go. There'll be a classic car coin coming up. This will be investing in real shares of real assets of classic cars that are being held for appreciation value. This is the Project Masternodes. It's run by 3 full-time software engineers to maximize the potential for those earnings. and the payouts are always made on the 1st and the 15th of the month. Okay, this is showing the current payouts. It's earning between 6 and 7% per month since February. And I personally, as I mentioned, have invested in this project, and I personally highly recommend it. So you can invest anywhere from 50 to 50,000 US dollars at a time. The real investment that I see potential with this Masternodes project is not just that the return is significant, because this is earning 6 to 7% per month, not per year, as many of my real estate investor friends see, but also you have the ability to reinvest your dividends. And I was mapping out today a chart that shows how that investment can be increased by reinvesting your dividends. And it's increasing your dividend anywhere between over a 12-month period. If you were to reinvest your dividends, you would earn an additional almost 40 to 50% additional return if you were to reinvest that money each month. So this is why the package has dropped down to $50 to make it easy to make those reinvestments. You could also just take that money out. I know someone who is investing in this so that they have just some play money to kind of play with. They're putting in 10,000 US dollars. They're expecting to get out $600, $700, $800 a month, and they're going to use a debit card, a Bitcoin debit card, just to pay for normal purchases. And that's what they would like to do with the money. Most of the real estate investors that have invested with this understand very much the power of compounding, and most of them have decided to increase their returns significantly by reinvesting their dividends. So it's whatever you would like to do with this project. You do have a 2-year minimum hold on the initial hardware and software and the purchase of the masternodes, but any earnings can be either reinvested, pulled out, or left there until you decide what you want to do with it. So that money is directly accessible on the earnings. CoinyWin is another project coming up very soon. Here we're talking about the debit card and the CoinyGram wallet, but you can use any wallet that you're comfortable with or that you have started using, whether your main storage is a cold storage wallet like Trezor or a Nano Ledger, or whether you're whatever kind of wallet you're using, that doesn't change how you make these transactions. The pay plan, if you'd like to make this as an investment opportunity as well as an earnings opportunity for you, is a very simple unilevel bonus payouts, meaning you don't have 3 tiers or a million different tiers or anything to understand. It's a very simple program. If you help somebody come into the program, you get paid. It's as simple as that. The payout increases depending on how many people you have in your group, but that is no means mandatory. These are the direct bonuses based on the number of, they're not costumers, they're customers. So you're getting between 5 and 8% direct bonus for bringing people in under you. There is, you want to strive as quickly as possible, get to be a team leader so that you're getting additional bonuses on bonuses in addition to the 5 to 8% based on how many customers are under you. And just know that the returns are significant. For myself, over 6 months, I originally started with a very small investment of $500. I've since increased that to $2,000, but I've earned in earnings and bonuses another $4,000 on top of that I keep reinvesting and keeps earning me a significant amount of money. So there is an entire team behind you to help support you if you'd like to take advantage of this opportunity. And if you'd like to hear more, click the link below and I'll get you set up, or send me a private message and we can talk about how to get you started making an investment in your future, in the future of money. is really what you're investing in. Have a great day, and send me a message below if you have any questions.